Good morning friends, myself Dinesh from Fundamental Research. I will be discussing the Q3 preview for banks. This quarter also we expect banks to deliver kind of subdued numbers, especially the PSU banks. The aggregate earnings for the Sharekhan banking universe is expected to grow by about 13.7% YOY compared to 14.4% growth seen in Q2. We expect the earnings of public sector banks to be quite slow, showing a growth of 4.6% YOY excluding Union Bank. The slower growth in earnings would be driven by subdued growth in the net interest income and also due to higher provisions. However, private sector banks will continue to post a strong growth. We expect private sector banks to show a growth of about 22% in the earnings. On the operating level, we expect the operating profits to grow at 11% YOY. However, the PSU banks are likely to show operating profit growth of about 6.7% YOY, whereas private sector banks will continue to show better operating profit numbers. However, this quarter there will be comfort of higher treasury profit as the yields have softened. So banks, PSU banks are likely to book relatively higher treasury profits. However, the fee income growth will remain subdued. That will compress the growth in overall non-interest income. Talking about the asset quality, we believe the asset quality is likely to improve gradually going forward. This quarter the slippages will remain, but the pace of slippages will moderate compared to the past 2 quarters. Private sector banks will continue to deliver a strong asset quality as we have seen the past quarters also. In case of PSU banks, the only concern is that the restructured loans are rising, especially from the CDR, increase in the CDR cases. However, we believe that given the positive measures taken by the government and also due to the expectation of monetary easing going ahead, the asset quality should improve over medium term. On the margin front, we expect banks margins to stabilize from here. Banks margins have actually been declining in the past 2-3 quarters due to high cost of funds and also due to reduction in the lending rates. This quarter we believe the reversal from interest income would be lesser. Also, due to decline in the wholesale rates, the cost of funds should come down. So we believe that margins should stabilize from here. So going ahead, we believe that the recovery in the economy and also expectation of easing by RBI is going to be a key driver for the stock valuations. In the recent up move, bank stocks have outperformed, especially the PSU banks, due to reasonable valuations. So we believe that the valuations for public sector banks remain quite reasonable despite the recent move. We believe that there's still some upside. On private sector banks, we believe due to strong performance will be able to maintain the premium valuations. We believe that revival in the economy and monetary easing would be key driver for the stocks valuations going ahead. We recommend ICICI Bank and Federal Bank among private sector banks, and Union Bank and Allahabad Bank among the public sector banks. Thank you.